Welcome to the JD Power Insurance Intelligence Podcast. I'm Michael Vermillion with JD Power. With me today are three of my colleagues from JD Power. Breanne Armstrong. Welcome, Breanne.
Thank you.
Mark Garrett. Welcome, Mark.
Yep. Hey, Mike.
And Steve Crewdson. Welcome, Steve.
Hi, Mike.
So today we want to recap the JD Power Insurance Advisory Conference, which took place in Chicago last week, and just cover some of the key highlights and takeaways from the conference. So when we kicked off the conference, we began with a keynote on the state of the industry. And I think my key takeaway from that was the P&C insurance industry has endured several quarters of losses. But it looks like there's light at the end of the tunnel for a couple reasons. One is that the carriers have gotten approval to take rate, and they're doing so aggressively. And kind of combine that with kind of minimal cat losses, I suppose, in Q1 of this year. But Breanne or Mark or Steve, what are your thoughts? What were your takeaways from the keynote?
Yeah, I agree. I'd say there was some encouraging news from Dr. Hartwig on it looks like insurers are getting back to rate adequacy. So as consumers, we should expect in the somewhat near future to see lower increases or maybe hopefully no increase in our auto insurance premiums at some point here in the future. The effects of economic inflation are cooling off on the insurers' books. So I think it was a pretty optimistic view of what the future could hold for the industry, especially in light of what's happened in the last 2 or 3 years.
Yeah, unfortunately, I'd say the some of that positive momentum was more on the auto side, because I think the property side is going to continue to see some struggles. Certainly with the forecast coming, that's going to be above normal year. Coming off one of the worst years is one of the thing that really stands out when you look at that combined ratio on the homeowners line being 111. It's one of the loss ratio behind that, I think, was the second highest in the last 20 years. So I think that really stood out, where auto, a little bit of recovery, but I think home is still going to see some tough times ahead.
Yeah, absolutely. I agree. I think on the home side, especially, we haven't quite seen the complete rebound from the impacts of inflation to when it comes to, the cost of materials and, just basically the cost to rebuild to, in addition to the cat losses and other, major cat events and loss events. So it'll be interesting to see how things kind of net out with home as 2024 continues on.
Okay, thanks. So the first panel was around digital trends. We covered a digital maturity model. We covered artificial intelligence, AI, and we kicked it off with a poll on the maturity model just to get a sense in the room of where everybody is and where they're currently seeing the most challenges. And I think one thing that was surprising to me was that many carriers are still kind of at stage one, which is what we call digital adoption. The way we define digital adoption is digital is the first channel of choice. So I think in our research, we see the median at around 40%, and that should be way higher given that we're in 2024. So team, what was your sense just on the digital adoption? Was that surprising? And where do we go from here?
Yeah, I'll say it just as a person who's been working with our data for a while. It wasn't surprising to me, I guess, looking at our data for so long. I think it's, if you step back from the industry, though, it's quite surprising that in the insurance space, that digital is the channel of choice, the most preferred channel for so few customers. If you think about something like the banking industry, or if anybody travels for business, when you're traveling, airlines and other types of travel, you're using your mobile phone almost exclusively these days for banking transactions, for travel. Many people, even for the utilities. And insurance, while it's not as a frequent touch point as your bank or traveling, you would still think that a lot of consumers would be migrating to those digital channels. But I think it speaks to two things, Mike. One is the way that the industry has focused on building digital capabilities for their customers, and maybe less focus on adoption on the front end and more focus on just what tools and what capabilities the insurer wants to provide without necessarily taking the customer viewpoint and into perspective around what transactions the customer wants to conduct through digital. And then secondly, I think it speaks to the importance of an agent still in this business. A lot of us on this call have spent more than 20 years in the industry, and I can speak for myself. When I started, I heard that by 2010, the agency model would be dead. And then in 2010, it was, well, by 2020. And here we are in 2024, and the agency model is still a very healthy channel in our business. So I think it speaks to both the way digital channels have been adopted by customers is partly how insurers have built out those channels, and partly just the stickiness of the agency channel and how that channel still provides a lot of value to customers.
Yeah, and just to piggyback on that, actually, in kind of addition to what we talked about in the session, just from what I've been hearing about, the adoption of digital from different carriers, is that containment is sometimes difficult because the channels aren't always well established enough, right? So in some circumstances, customers are able to kind of start, a task or a process through digital, but they maybe can't finish it via digital. So then they end up having to switch channels anyway. So there's a lot of carriers that are kind of navigating that space. So maybe there's kind of that initial adoption, but then how do you design your digital strategy to ensure that customers can continue in that channel in order to finish, the tasks that they started? So I think that's, a kind of a major challenge that carriers are facing today.
Yeah, it was definitely an interesting session. I think there's a lot of good insights shared around digital. I think like AI was definitely coming up, right? Generative AI was something people wanted to talk about and engage around. I think they were talking about how much AI can help, and just early phases of summarizing notes, documenting stuff, reviewing documents, providing summaries. They talked about reading coverages, right? Helping with some of those, kind of prompting the CRs as well. I think another thing I thought that was interesting too when we talk about digital is just the rate of change. Just to give some context to that, Corporate Insight kind of tracks these changes to insurance company websites. I mean, they shared that, right? The dynamics changing where we're not doing the big overhauls anymore. It's more kind of tweaking along the journey, making these changes. And they said like the volume of changes was up almost 80% year over year. That's a pretty big change. So I thought that was an interesting thing that stood out to me for sure.
Yeah, Mark, you touched on it. One of the other topics we covered in that panel was AI, artificial intelligence, and we did a poll just to get a sense in the room of where people are. And I think the choices were number one, you're aware of AI. Number two, you're testing something. Number three, you're implementing something. And I think the last option was we're just not going to go there because we're waiting for the technology to mature. And most of the people in the room told us that they were testing, which I think was a little bit surprising. I was surprised a bit to see that we know there's a lot of interest in AI, but kind of surprised to see that such a large percentage of the carriers are testing something right now.
Yeah, I think it was 75%. If when I looked at my notes, right, that was a really high rate. Yeah.
Yeah, I was surprised to hear that as well, too. And I guess there's probably all different levels of where they're testing it at, right? Are they testing it in kind of a customer experience component? Are they testing it more from an underwriting component? There's so many kind of different opportunities, but it's something that, personally I'd love to kind of dive more into, with the carriers and figure out where exactly they're testing it, because I was surprised too by that percentage as well, that, so many carriers are kind of already taking that next step versus kind of waiting for it to mature more.
So, Steve, the next panel was on the latest shopping trends. So, what were the key takeaways there?
Yeah, I think it was an interesting conversation we had with TransUnion. Was joined us on stage and talked through the over the last 2 years, we've seen some volatility in the rate of shopping for both auto and home insurance on the personal line side of things. If you go back to late in or early in 22, we saw a really increase in shopping due to the hard market that we were in, and premiums were going up. But you also saw some pretty active switching of insurers, because at that time, if your own premium went up, you might be able to find an insurer who had not yet started increasing premiums, and you could find a lower premium company to switch to. By the end of 22, that was really difficult. So consumers were shopping a little less, but definitely switching less. And then last year we saw kind of that same cycle. In the first half of the year, we saw what was to date record shopping rates. And there were a couple months where switching was pretty high, but overall switching was starting to come down because, again, it was more difficult to find a lower premium. Consumers were out looking, they were trying, they were getting more quotes on average when they were shopping. So they're putting in more effort to find that lower premium, but they just weren't able to find it. So in the second half of last year, shopping and switching just started to fall down precipitously. And then we opened up this year with our Q1 reporting and saw that shopping had hit a new all-time high. And switching, again, was moving up a little bit, but not really super active switching because it's still hard to find a lower premium. And then we showed out in Q2, yet a new record for shopping, that consumers are, I think it's fair to say, fed up with multiple renewals on their auto and home policies, seeing increases cycle after cycle, and are putting in effort now to find that lower premium. And while it's difficult to do so, because at this point now in the hard market, every insurer has been taking rate, every insurer has been increasing their premiums. Consumers are fed up enough that they're just going to keep trying to find that better deal. We also discussed the phenomenon of, as more people are shopping, what we see in our data is more households are making that tough decision to go uninsured, and how that will reflect on those of us who are insured, maybe looking a little bit closer at our uninsured and underinsured motorist coverages, that because there are more people on the roads these days that are driving uninsured, we want to make sure our coverages are adequate. And then lastly, it was interesting to see how both the survey data we have at JD Power and the rate call data that they're using at TransUnion really aligns well. If we look over the last few years, when we see an increase in shopping, they see the same. When we see a decrease, they see the same. So really good confirmation that what we're seeing in our data from survey respondents is indicative of what's happening out there in the marketplace.
So Steve, as part of that panel on shopping trends, we took one of the things we did a double click on was around households. So what were some of the key takeaways there?
When we revisited the insurance neighborhood analysis that we introduced 2 years ago at the conference, and saw that while shopping is increasing, it's not increasing evenly across different household types, that the type of household that's seen the sharpest increase in shopping is that most valuable Robinson's household, and the Robinson coming from the Progressive segmentation being that bundled customer. And we went a layer deeper and looked at how many drivers, how many vehicles they have. Again, that being directionally correlated with the amount of premium that the customer represents. We saw that those multiple driver, multiple vehicle, bundled auto and home households, the really valuable, like Robinson's Plus type households, are seeing the sharpest increases in shopping. So while they're not yet matching the rates of other types of households, they're not shopping as much as the renters or unbundled homeowners. They've seen some sharp increases, which I think is going to be encouraging and sound good to a lot of insurers that are trying to win that type of household, that more are coming to market. But they have a different appetite than the customers that have been shopping the last couple of years, who are really just focused on price. The Robinson is going to be more focused on value, and while price is helping drive them to market, they're not going to be that same price sensitive customer that insurers have been selling to for the last couple of years.
You know, Steve, that's a real it's a good segue, kind of ending on that comment, into the next kind of topic around marketing, because you could make this connection of, well, they're shopping more, but they're also being marketed to much more aggressively. So one of the things that was shared in our next session was, direct mail was way down, right? And it was like a drastic reduction, something like 50% drop in direct mail volume. But when you kind of peel back those layers and looked at those high lifetime value customers, like those Robinsons, those multi-policy, multi-car households, we found that there was nowhere near as steep of a drop. So they're still heavily getting, it's just more a honed in, focused message to that type of customer. You could say that's a little bit more effective because they're actually creating a little bit more churn and shopping as a result of that. So definitely some connectivity there.
So Steve, the next panel was titled "Where's the Marketing?" We had a couple of interesting guests on that panel. So what were some of the things we talked about, and what were a couple of key takeaways?
Yeah, we were joined by folks from Competiscan, who's a major player in many industries, including the insurance space, and by Danetta, who of course is a player in many industries as well, including insurance. And What we saw is that at an overall level, when you look at the NAIC statements that carriers are reporting to the National Association of Insurance Commissioners, ad spend is down around a third in the last 2 years. And this is after decades of rapidly increasing ad spend in the auto and homeowners insurance space. If we go back to the 90s or early 2000s, there wasn't much activity in advertising for auto and home insurance. And if you're at an ad agency, it wasn't the industry you'd want to get your horse tied to, right? Your wagon tied to that horse, I should say, to the insurance industry. And then we saw the last 20 years of rapidly increasing spend in that space, and just a kind of an arms race between Geico, Progressive, and some of the more traditional agency-based carriers that weren't spending as much. We saw State Farm rapidly increase their spending along with other carriers. And in the last 2 years, because of the profit pressures on insurers and the increasing costs we've talked about in other webcasts and other podcasts, we saw that insurers took a lot of cost-cutting measures. One was to decrease their ad spend by a substantial amount. And Rich Goldman from Competoscan really pointed to some very recent data on how it's affected ad spend in direct mail. And he pointed to a sharp decrease, even sharper than the overall ad spend decrease in direct mail. But he went a layer deeper and pointed to how direct mail volumes are fairly consistent for that Robinsons type bundled, multiple vehicle, multiple driver household. If you think back to 2 years ago when the likes of Geico and others were really pulling back aggressively from acquiring new customers, all of the larger insurers, all the larger national insurers were out in the public saying, while we're pulling back, we really, really want to win that bundled Robinson household. While we know that our rates are inadequate today, again, this was two to 3 years ago, we know our rates are inadequate today for the cost pressures we have. We don't want to compound that issue by winning a customer who just all in all wouldn't be as profitable anyway. So we're going to really hyper focus on that really valuable bundled multi-vehicle, multi-driver household. And what we saw in the data, even as of the last few months from Competoscan, was that those households are seeing about as much direct mail as they did previously. So while spend overall is declining, they're still seeing a lot of mail pieces sent their way to try to acquire that high value household. And another interesting fact that was shared was the increase in retention marketing. So if you think about marketing around customer acquisition is down sharply, that really, again, high value bundled multi-driver, multi-vehicle household is getting a lot of retention marketing sent their way, whether that be direct mail, whether that be digital or through other channels. Insurers know that while they're out trying to win somebody else's high value customer, their competition is also doing the same and trying to steal away their high value customer. So a lot of spend right now has been surgically focused on the high value consumer. So if you represent one of those households, you might be hearing what I'm saying and saying, well, ad spend can't be down. I'm seeing just as much mail, as much direct mail and as much digital advertising as I've ever seen from insurers. Well, there are many households who are not seeing that. That high value household has really been the focus of ad spend in the last couple of years.
Yeah, I want to say, I think they shared when they were looking, you mentioned the direct mail volume. I think he also shared an email volume metric. But, year over year, looking, I think at the first half of the year, it was down, I think 20%, I think is what he said from an acquisition standpoint, right? So email volume's down 20% from acquisition. But like you said, that retention, that kind of affirming new products, features, things like that to existing customers. Yeah, that was holding steady, if not increasing, right?
Yeah, and we pointed out in that to that point, Mark, that among recent shoppers, the discussions around other products that the insurer offers. So a recent high-value shopper who has great credit history, great driving history, they have multiple insurance products, they have multiple drivers and vehicles, all these things line up, that's the household that these insurers want to win today. They're less often in our shopping study research being exposed to these other products and other services that an insurer offers than their lower value counterparts. So we did mention to the industry that as we're doing with our subscribers to that study, there needs to be more of a focus on the front end when we're quoting and when we're having that first conversation with a prospect, understanding the value of that prospect and getting that right offer in front of them, because it's very surprising, I think, at least in seeing that among recent shoppers, the low value households are more often getting that consultative, here's the other products we offer type of conversation than that high value household who values that and really needs those other products. So there's definitely room to grow in the industry in terms of understanding that prospect when they walk in the door, and tailoring the experience that they receive when they're shopping, when they're quoting, when they're binding their new policies.
Yeah, that's essentially how all of these topics I think weave together, right? Because then the final, to me, like the closing session was around the role of the agent, the changing role of the agent, and touching on customizing the product, making the right offer at the right time, making a customized, offer to a consumer about their insurance needs. That was how I think they talk about AI being incorporated and helping drive that, right? That's a place where they can get smarter, right, and use technology to help make the agent make a better product fit at that point of sale, right?
Yeah, Mark, that's a great segue to the last panel of the day, Steve, where we talked about the role of the agent in the future. We know from JD Power research that consumers actually have a strong preference to work with agents. It's a vast majority of consumers like having an agent on hand. And we also know that experience with the agents can make or break renewal and retention. So what were some of the key highlights from that last panel?
Yeah, good point. So a couple of the key highlights, I think what Mark just mentioned around the role of the agent and their importance in acquiring that high value customer. High value customers are still quoting more so than others through agents, binding policies through agents, and joined on stage by a representative from Salesforce and another person from eGain. We talked about how important it is for the agent to be the translator. One role they play to the consumer is the translator of what is all this legalese, all this insurance speak, what does it mean to me as a person who's just trying to protect my liability and protect my assets. And then also really a consultant, an advisor to them around this is the right product for your needs, these are the right coverage limits, these are the right deductibles, this is the type of policy you need for that, et cetera, et cetera. And how technology can really help enable those agents. So I think it sometimes is viewed as agent versus technology because the digital channel will steal the agent's customer, et cetera, et cetera. And I think what we focused a lot on is how technology can be the enabler for the agent, not really a competitor to the agent. And that AI, we're all familiar with various products that help us in our daily jobs that may or may not be AI-based. It's increasingly AI-based products are helping us do our jobs. And how that can really improve the customer experience with an agent. That an agent doesn't need to be fully up to date on every last thing that's happening in the industry, that AI can help them with that. That the agent doesn't need to know the ins and outs of every single endorsement. You think about an HO3 policy that can have hundreds of endorsements. They don't need to memorize every one of those. That AI can help them with that. And just the other technologies can help with that. So that was an interesting part of our conversation around how does the technology that we have today enable the agent rather than compete with the agent and provide a better customer experience, because especially, as I said at the beginning, those high value households really value that agent experience. And you're not wrong at the beginning, Mike, that even those medium and lower value households really are still leaning into agents more than many people expected a few years back or a few decades ago. But to win that high value customer, the translator role, the advisor role of an agent for that high value household is critically important. And technology can certainly help the agent be more productive and provide a better customer experience.
I think the other area that came up too, just to piggyback on that, was, and I think helping the agent be more proactive in handling those alerts. I think there was a lot of discussion around rate increases, right? Everyone's facing them right now, multiple times too. I think that came up from the audience too. Like, how do you handle multiple, rate increases over time? And I think one of the big opportunities, or the carriers that are actually doing better at handling that, are getting some of that proactive information to the agent's hands to then, be prepared to have those discussions, have more informative discussions, and maybe make better product recommendations for their clients. I remember that coming up as a big potential role.
Yeah, that's a good point. The proactivity of an agent. We've all spent so much time as consumers and as people in the industry talking about recent hard market and rate increases. So we pointed to the fact that a customer whose agent reached out to them proactively and had the right conversation with them, even though they had an increase in their premium, was just as satisfied as a customer who did not have an increase. And that was just one example of how an agent who feels equipped to have some of those tougher conversations with a customer and thus far today, we've been talking about the technology part of it. But one last thing we touched on in that session at the advisory board was we saw some research recently that, generally speaking, not just with agents, but 9 out of 10 employees don't really feel comfortable or equipped to have a tough conversation at work. And so if you translate that into an agent's role, if 9 out of 10 agents aren't willing to have a tough conversation with their customers around, well, your premium's going up at this renewal, and this is why, and this is what you can do about it, they'll avoid that conversation. And the data shows that will lead to a less loyal customer. It will lead to shrinkage in their book of business. And we feel pretty strongly that there's opportunity to help train agents on how to have those tougher conversations and how to have some of the soft skills and humanize the experience of an agent, an insured experience that will make the agents feel more equipped, more enabled to have, and ultimately more comfortable to have those conversations that I think many today are avoiding just for fear of, I don't know how to really handle this. I don't want to bring up a bad topic with a customer that they're going to have an increase, and not really take into account, well, by avoiding it, you've created a whole other problem of now they're going to be more likely to leave your agency and leave your carrier.
Yeah, and that's where we see AI as a big potential there, right? So helping guide that conversation, right? Real-time scripting, whatever it is, feedback, like knowing, the consumer situation, the product coverage options, and like scripting somebody through like a flow or talk track. I remember that coming up too. Is like that's a big potential for AI to, make a market improvement in that communication.
Yeah, the combination of technology and the right training that the agent has the technology at their fingertips. They've been trained on how to have those tougher conversations, the soft skills. I think why an agent gets into the business, they want to sell insurance. They don't necessarily want to have tough conversations about the policy with a customer. So both the technology mark and the training can help enable that agent to feel more well-rounded and more able to have the tougher conversations with their clients that they need to have.
It actually was a very timely session because it really relates back to some of our findings in our auto insurance study. So I'd be remiss if I didn't mention that the impact of the agent is very strong when it comes to building trust too. So we see that having strong performance and agent courtesy and knowledge, that those types of interactions can help build trust. And we actually see a bigger impact too with agent interactions on those high value customers and building trust. So trust scores tend to be higher if customers have had a recent agent interaction versus if they didn't. So it really has kind of this halo impact, the agent relationship on, not just, increasing satisfaction, but increasing kind of that overarching trust in that relationship building over time. So that session actually fit really well with some of our findings recently in AIS. So.
Yeah, so overall, it was a great conference on some topics that are super important to the industry. So Breanne, Mark, and Steve, thanks for joining us today to recap the conference and the some of the highlights and the topics.
Glad to do so. It was a great conference. Happy to be there. And anybody who's watching this who attended, thanks for attending. We look forward to seeing you next year as well.
And we want to thank our listeners as well. You can join us here each month for the latest on our JD Power Insurance Intelligence podcast. And stay tuned for more information on next year's advisory conference.